Hi, everyone. My name is Andres Ospino with the Family Office Club. And today we have the pleasure of introducing you to Timothy Cunningham, who's going to be sharing with us his firm's capital raising success. So, Timothy, thank you for being with us today. If you can please let us know a little bit about yourself and your firm.
Sure. Let's see, myself, very quickly, I co-founded a group of venture capital funds in the 80s in Philadelphia. Subsequent to that, was the first consultant to both of the big public pension funds in Pennsylvania. So the Pennsylvania public school employees and the state employees for their venture capital and private equity program, which at the time was robust, but they didn't have a consultant. And I had never done that before, but since I'd spent some 6 years or so in the venture business, I undertook it. Subsequent to that, wrote a couple of books, went into business with the former chief investment officer of one of the funds, and ultimately formed Touchstone Group in 2002 as an institutional placement agent. Now we handle both liquid and illiquid, that is to say hedge fund strategies as well as private equity and venture capital strategies at the outset. But pretty soon we all return to our roots in the illiquids, and we don't represent generally, we're exclusively the illiquids now. So we're institutional only, and we call on several hundred family offices. I would say probably 400 or so, 450, somewhere in that area. Both in North America and in Europe, to a lesser degree in Asia. And generally for a family office, for us to want to call on them, they have to be of an institutional orientation. That is to say, where the patriarch or the G2, G3 offspring aren't actually managing the money. They've hired people to manage the money. And that's as distinct from the so-called multifamily offices. There are a few of those where the families actually do get together and share admin and all of that, but very few, and they don't survive past the main patriarch organizer dying. Typically, they kind of spin apart. So single family offices in excess of 500 to 700 million in investable AUM at that juncture. They hire staff, they get CFAs on board, and so forth. Smaller than that, they often handle it themselves or perhaps a wealth advisor, but it isn't a dedicated group. And we call on the dedicated groups.
Excellent. Thank you. So working strictly with institutional single family offices that have a CIO or CFO really in place to allocate the funds. And I know you and your 5-person team have raised over $5 billion to date. And you kind of just answered that question in terms of who you serve and who you raise capital from. But do you think that picking that segment of investors is really what has allowed you to hit that number and hit those targets?
Oh, clearly. In terms of the gross volume of capital raised, no question that when you call on people whose bite size is 10, 25, 50, $100 million, then you're obviously going to raise more capital. But the process of raising capital from those sorts of people is different from the process of raising capital with more relationship-based kinds of an approach. Both are equally valid business models, but we pursue the institutional side.
And can you paint a picture for me a little bit on what those differences could be in terms of raising directly with the patriarch?
Sure. Yeah. First of all, the relationship-based business is, by its nature, it's going to be limited in size. You can't know everybody, and you can't have a trusted relationship with the decision maker in many family offices at once. I mean, you can get passed around, if you will, and there are people who did. Bernie Madoff is a great example of somebody who was passed around. Yeah. But generally speaking, the relationship business is a one here and one there. You play golf with folks. You see them socially if you can, and so forth. Now, our business is process driven, so we help our clients shape the narrative and materials and all of that. And we know that we're going to get turned down. Our relationship gives us the access in terms of speed of response. But since it's a team sport in the institutional world, no one member of the team typically can speak for the whole team. Even the CIOs, they've established an allocation plan. They have an existing portfolio. They have other things, other fish to fry. So if you call them up, assuming you can get through to them, they'll tell you, well, we're looking for lower middle market buyouts in the healthcare services space. And you say, well, we actually have a really interesting early stage Silicon Valley venture group. And they'll say, well, we're not really looking at that right now. And it doesn't matter how, what your relationship is with them. You can't sell them. You can sell a patriarch. You can persuade a patriarch with narrative that this is something that they might want to do. And you may know what they know and like, and they trust you for your judgment. And so you bring them something that you know that they'll like, and it's a different kind of relationship.
And so it's a different type of relationship, but in terms of the processes, how are you working to get through the gatekeepers and to be able to get that call in that meeting with that CIO? What's the qualification process like? Are you not finding out what that mandate is until you're finally on the call with the CIO, or are you finding it out at least beforehand and possibly still setting up a meeting for the clarity? How are you qualifying that?
Yeah, it's a good question. Yeah, it's a good question. First of all, the CIO doesn't often involve themselves in the initial stages of manager selection. Mm-hmm. So you're going to be dealing with staff. Now, if you're dealing with staff at a place like, Allstate Insurance, they've got 20 some odd people on staff. They put out, a lot of money every year. They invest off their balance sheet. You're not talking to the CIO, first of all. Secondly, how do we get in front of them? This is really our clients more than us. Our underwriting of folks, in the sense that, we look at a lot of managers and we do our work, and we know that team, strategy, and track record are the three elements that are important to professional investors. And we want to see, you can't get everything, otherwise they wouldn't hire us to raise capital. But, you want a team that's gone full cycle in the discipline and strategy that they're promoting or offering. You want a strategy that all else equal is in favor and differentiated to the degree that it's unlikely they have full exposure to it and want that exposure. And you have to have a track record that makes sense for them. And track records that make sense for institutional investors in the illiquid space generally have to be over 3x gross MOIC, multiple of invested capital. And, you have to be sort of above 30% gross IRR. Now you have to take out fund expenses and carry, of course, from that to see what the investor actually gets. But those are sort of the gross numbers that we're looking for. So we need to see the team right. We need to see the strategy right. We need to see the track record right. You get all three of those elements right, and that nothing sells itself. You create the narrative, but it's the client, it's the fund, it's the offering that matters. We just have to know what offering it is that's going to sell, because if it's not going to, if it isn't, if it's not marketable, we don't make money.
Yeah, absolutely. And can we dig a little deeper into that narrative? What does it mean to build a narrative? I myself find that a lot of firms have the track record, have the numbers, and they feel like that's enough. And us, Family Office Club, being very marketing heavy, we do talk a lot about making sure you build that narrative. And sometimes you get a little pushback and say, well, that's not needed, or that may come off as too salesy.
The numbers will sell. The numbers speak for themselves. Actually they don't. And people don't buy numbers. All right. First of all, I make an outrageous ask of investors, just outrageous. And that is, I'd like you to commit to invest $50 million, say, to pick a number, in a manager, and that manager is going to operate a 10-year limited partnership, blind pool. You don't know what is going to be in it necessarily. Maybe they'll have an asset or two, and they're going to take 20% of the profits, and they're going to charge you 2% a year for the privilege for 5 years of investment period. And you know what? At the end of 10 years, they probably won't have exited everything, so they're going to have to add a couple more years. So you're in this for a dozen years, and I can't tell you what we're going to invest it in. So trust me. Now, that kind of a trust me sale is, we do that, right? I mean, that's what you do when you're selling these offerings, right? Well, that kind of a trusting sale requires a narrative to enter into the possibility. So why do I say that? Human beings, we haven't had writing for all that long, right? Mm-hmm. So narratives are how we've organized and construct reality. My son, the honors Princeton English graduate, tells me about how narratives are constructed. And he says, it's really interesting. You've got a protagonist, you've got a challenge, and the challenge is overcome. That's the structure of a narrative. So you say, well, how do you do that with like a GP in a venture fund or something? Mm-hmm. Well, okay, you have the protagonist, that's ABC Venture Fund or XYZ Buyout Fund or whatever it is, right? What's the challenge? Well, how does the strategy solve the problem at hand, whatever that problem may be? In terms of differentiation, does it give somebody better exposure? Why? How's that work? Because, you need this. So there's a challenge to be overcome. And how do you overcome it? Well, you make the commitment. So that's a very oversimplified way of describing how narratives are created. What's the challenge that needs to be overcome here? What problem are you seeking to solve for your investor? And then you can put it together. And you have to know what the investor wants. It's not just numbers. They need a story to understand what you're doing. And you have to put that together. It's like we were representing at one point a Brazilian group, and we raised a couple of funds for them. The first was, I guess, about 175 million, and the second was, I think we were targeting 300, and we got 380, something like that. So they were both oversubscribed. Not me. It was the GP. They were brilliant, yeah. And yet, when he went to market, he didn't have a good origin story for himself. And as it turns out, he was investing in the value chain in ag, doing buyouts in Brazil. Didn't even have, what was his backstory? Backstory was his dad had run Monsanto Latin America from St. Louis. He went to high school in St. Louis and then to Harvard. His backstory was that he grew up in the Pampa in Argentina, and his grandfather owned a big farm machinery dealer. He had all this farming stuff in him, and he had an ag fund, and he hadn't even put that together in the strip. People want to know, who are you? This is an outrageous bet. Yeah. Who are you? So you got to put that together, and the origin story, and that's the protagonist part. And then the how you overcome whatever challenge it is you're offering is that part, and then you're the solution. Now that's so overly simplified, but that's how I do it anyway.
And what would be your advice for a firm, right? Because for me, it's the narrative, right? I've been in marketing since the beginning of my career, and we've had different names for the narrative. We've called it the ID, we've called it the bio. We've also called it the earn your right. Right. One of the mentors that I learned about building narratives called it earning your right. Your right to be able to go into the next step and actually discuss your strategy and why and your product. What would you say to someone who, it's easy for me in a sense because I've been around marketing and sales for so long, but what would you say to someone that it's, they know the markets, they know their investment strategy, but this doesn't come natural to them? What would be your advice to them on building a narrative, on building that brand, that story?
Well, first of all, nobody exists in a vacuum. So you don't need to refer to your competitors directly, but you need to position yourself within that real ecosystem of people competing for that money that you're looking to have committed to you. So you need to understand that. What buttons are being pushed by other people that are resulting in successful raising of the capital? And I don't mean that in a programmatic way. I mean in a very thoughtful narrative way. What's the competition saying? And in other words, what does everybody know about this market? And do you know that? And if you do, that's great. You should. But what do you do that's different that you know about? So placing it in context is the most important thing. You're not an island. Who are your competitors? Not by name. Who are your competitors? Not by name, but what are they doing? What do they sound like? In fact, many managers like to put some kind of map the market in their deck, and I said, no, leave other people's logos out of it.
Yeah.
You need to know this. You need to know where you are. If you're going to do it in a generic way where you say, well, in terms of stage of development, here's where we sit, or in terms of this, that, and it's a generic chart on the industry. But know where you are in the marketplace. What's your position? Are you maybe everybody doing what you're doing has the kind of numbers you've got. Maybe everybody's numbers are terrible. Maybe there's a reason why what you're doing is special, but you need to contrast it to the other stuff to make sure that it comes out as special. Does that make sense?
That makes incredible sense. It's so valuable. It's so incredibly valuable. I really hope that people really take that to heart, because we call it the unique value proposition, the unique sales proposition, the contextual investment proposition, and really working hard to develop that. I think it's absolutely critical, and people have to understand that you have a track record, you have great numbers, but people want to feel something powerful as well, and that's what that's there for. So thank you so much for sharing that, Timothy. Fire hose session, 15 minutes. Thank you for delivering so much value.
Terrific. I appreciate it. Thanks for the chance, and maybe I could do it again at some point with new questions.
100%. Thanks so much.
Alrighty.